So basically, in today's session, we are going to cover the fundamental ingredients of the stock market. Uh, okay, so it's like to cook any dish. Maybe it could be a biryani or a butter paneer or anything you like. We need individual ingredients. Okay, and it is very important to know those ingredients in and out so that when we are in the process of actually cooking the recipes, the dish, we should know how much to use which ingredient and at what point of time. So, so the today's session is the formal introduction of the technical analysis, where we are going to cover very key ingredients about the stock market. Okay. Uh, so this is all we are going to cover, like the background, maybe some of the things we have already discussed, the DOW theory. Once again, a quick recap, how to identify outperformer and underperformer, charts and candlestick, time frames, trend lines, which is called support and resistance, candlestick types, and volume. Okay, so just a quick recap, what we discussed so far. We discussed about the bull. Okay, so bull is nothing but a kind of a buyer who bets on the rally. Rally means the who is predicting or uh, you know expecting that price will go high. Okay, so he is selling maybe selling the sorry purchasing the stock by with the mindset that price is going to go high. Bear is the seller who bets on the declining of the price. And when there will be a fall in the price, based on that, he is going to get the benefit. So bull and bear, I think so far it is very clear. Okay, so one is expecting the price to go up, and there is a price to go down. So there is a third category we are introducing today. That is the pig. I mean, this is a terminology perspective. Nothing to um, correlate about that. So basically, those are the somebody who are the very greedy, okay, and who get smashed in between bulls and bear. And how to, it is in the stock market, it is always recommended that never be a pig. I mean, as soon as possible, you understood that something is going wrong against your trade, get out of the trade as soon as possible. How we can do that, we will learn in the subsequent sessions. Few more points, that what is the share price. So basically the share price of any stock or any company is the perceived value of the company. What is mean by the perceived value? That means it is not the actual intrinsic, means it is not the actual value of that company's stock. Okay, so it is basically, then what it is, the stock, the price of the share. It is basically the price which is paid by the last person to purchase it. Okay, so for example, if I say the current market price is 100 rupees, and someone is selling the same stock in maybe the 101, 102, 103, and so on and so forth. But somebody is not ready to pay the higher amount. Maybe somebody is ready to pay 101 rupees for the stock. So that will become the price of the stock for that particular moment. And or it is the price what the next person is willing to pay. So if somebody at the same time, if somebody is willing to pay maybe for the same stock in 105 rupees, that the price of the stock is going to be. Okay. At the same time, if somebody is not willing to pay maximum amount, if somebody is willing to pay is 95 rupees, and the deal happens, so the 100 rupees of the stock price will go to 95 rupees. Okay, so this is what the stock prices. So it is not the intrinsic value of the any stock or the actual value. It is basically the perceived value of the company. And there always be a kind of a opposite view in the market, and which is very much essential, because if there won't be a opposite view in the market, then there won't be a trade, right? Like there will be uh, n number of people who are ready to sell their stock. At the same time, there will be a m number of people who are ready to buy. So it is not necessary that okay, there will be equal number of buyer and seller, but the main point is there will be a any point of time there will be a buyer and as well as a sale, as well as the sellers. And when uh, these two views exist in the market, and that is how the stock exchange or the purchase, sale, and purchase of the stock gets place. Yeah. So few points about the technical analysis. By looking into the word, by hearing the word, you might think that technical analysis is really technical, but actually it is not. It seems complicated, but in reality it is simple. And again, it is really simple at the same time, but not easy. So just remember these two lines for now. We will understand more why it is very simple and why it is not uh, easy. It is simple but not easy. Okay. Um, so any like it has nothing to do with any intrinsic value of the company. So as we were discussing earlier about the fundamental analysis, so when we learn about the technical analysis and going to do the investing and trading based on that, so the intrinsic value of the company is not considered. How the company is you know uh, the internal management is, what internal management is doing, what are the books are doing, how it is their finances or quarterly results. All those things are not considered while doing the technical analysis. So it basically deals with the forces of demand and supply, and which reflects in the price movement, which we learned in its initial two session. Okay, and also it studies the prediction of the future movement. So based on the technical analysis, we are going to learn how to predict the future movement of any stock, and based on that, we are going to do the investment or the trading. Um, and here, the pricing chart are the primarily tool for this analysis. So whatever the chart candlestick pattern that we discuss, whatever the chart will be there for that company's stock, that will be the primary base for our technical analysis. Okay, and this is the one of the most important things. So there are many things we are going to learn. So it is not the exactly the science. It is less of science or not the science. It is more of the art. Okay, and why that statement I'm making it here again. We are going to learn that why the trading or the technical analysis is not an science. It is more of an art. Okay. Um, few more points like share price is determined by the market forces, as I said, demand and supply. And share market, again, share price is not determined by the actual value. Okay, and only the technical analysis gives you the tool to study maybe hundreds or thousands of companies without having knowledge of the company performance or fundamentals. Okay, so via the technical analysis, for example, if somebody need to learn or read about any company, it will take maybe a couple of days to months to understand the any company's performance. At the same time, the technical analysis empowers us to understand about the company or the analyze about the company. Maybe one day you can analyze the hundreds of company without knowing the company's performance or the fundamentals. Okay, and at the same time, technical charts are again going to tell you that if something is good or bad going to happen without knowing anything else. So by just looking the chart, you should able to know that okay, what is going to happen next, most in the most of the scenario. Okay, and then only the technical analysis is going to help you to determine your money risk and reward. So based on the what it means that okay, based on our technical analysis, we are going to learn that okay, if we are investing X amount of money, or let's say 100 rupees of money, then how much will be the risk? Maybe the risk is 10% or 5%, and reward is maybe a 50% or 100% or so on and so forth. So these are some basic, concept that some of them we learn touched earlier. Few of them we are touching, repeating now for your benefit. Okay. And again, the DOW theory, it is one of the most important theory which we learned during the last session. We are again going to touch upon. It is developed by the Charles Dow, who are known as the father of modern technical analysis, and who developed this theory. And about Dow theory, there's only the three things that market moves in the trend. Trend means either it will be uptrend, downtrend, or sideways. And volume confirms the trend. So volume means the number of um, person or number of trades that is happening in that particular time frame, that is called volume. And at the same time, a trade remains intact till it gives a signal. So any trend, it is an uptrend or downtrend or the sideways trend, before m- making any change in those uh, charts or the trend, there will be some signal. Okay, so as a technical analyst, we are going to learn how to capture those signals. Okay, and before knowing that, okay, how to capture, first of all, we are going to learn those individual elements. I was giving the example that if you wanted to cook a biryani or maybe a butter paneer, we need to know the ingredient first, and then after that we are going to learn how to cook the dish based using those ingredients. Okay, so Dow 3, the quick recap, what we learn is any chart which is making a pattern of higher high and the higher low. Okay, that is the Dow theory. So if you look at the all the highs, the next high is the higher than the previous one, and so on and so forth. And at the same time, next low is higher than the previous low. So if any chart is making the higher high and higher low, that will be considered as the uptrend or outperformance as per the Dow theory. At the same time, any chart pattern who is making lower high. So lower high means the next higher point is, sorry, next lower point is lower than the previous high, and again next to next one is again the lower high of the previous high. So that is okay. If that kind of chart pattern is observed, this is called the downtrend or uh, decline stocks. Okay. Um, and the sideways. So sideways, it's a simple. There is no clear cut higher high or lower low. It is the maybe the low here. If you see that, okay, these are the high, but the next high is become the lower than the previous high, and the next high becomes the higher than the previous high. Same thing for the lower point. So uh, next low is higher, but again next low is the lower than the previous low. Okay, so there is a mix of the trend high and low, and such kind of a stock is, or a trend is called sideways trend. And okay, then we need to wait, and whenever there is any stock in the sideways, we need to wait and watch when the stock moves in the sideways turn. Till the time it is in the sideways turn, it is recommended not to do any trade. And once it goes any side up and down, that is again we are going to learn, then we can decide. And as you always said, I mean, no matter whatever is the trend, the same trend is not going to be there forever. Okay, the simplest form of technical analysis, okay, it is a very simple term that we say that, okay, Ghoda, normally that term, generic term is called outperformer, Gadha is underperformer. And so ride the Ghoda, right, means the ride as a bull, and roll the Gadha as a bear. I mean, the ride the outperformers as a bull means whenever we observe that any stock is going, I mean, behaving like an outperformer, then okay, once we find the trend, just go with that. At the same time, once we observe or any trend which is going as a um, decline decline performance stock, you can do the short selling of those. And how to identify those outperformer and the decline performer. So in the last session, we also understood, maybe here, maybe a few more quick examples. So here are four. stock example we are having BHEL, Vedanta, Infosys, and Dr. Reddy's at a certain point of time. These screenshot was taken. So based on these chart, please indicate your choice. What you think? What are the here is the outperformer and which one is the underperformers? Please type your response in the chat box. BHEL, Vedanta, Infosys, and Dr. Reddy. Which one you think is the outperformer? Which one you think is underperformer? Maybe you can use O for outperformer and U for underperformer. Please share your response in the chat box so that I can understand that what we are learning is getting into your head. And if you have any question, please feel free to ask. Fahad said outperformer Infosys and Dr. Reddy, underperformer BHCL and Vedanta. Perfect. Okay, so it's a very simple. Right. SM said yes, outperformer Infosys and Reddy's. Yes, absolutely correct. Okay. And here are the other four example. Tata Steel, Sun Pharma, Asian Paints, and ITCs. So based on these four example, please indicate uh, the outperformer as O and underperformer as U. Please share responses in the chat box. And maybe anybody have any question, please feel free. I will maybe unmute yourself, or you can. Okay, outperformers are Asian Paints and ITC. Uh, what about Sun Pharma? So ITC, yeah, maybe at a certain extent it is outperformer, but maybe if you look at the overall, there is no clear cut as per this trend. So the clear cut outperformer are Asian Paint and Sun Pharma. Tata Steel and ITC, maybe we can say they are the more of the sideways. Yes, SM said yes, Asian Paint, ITC, or Sun Pharma. Perfect. So here, the basic ingredients we have talked about. So these are the basic ingredients, basically the chart. So a chart shows the price action of any asset. So there are the multiple terms we are going to use in this one. So somebody says script or the stocks or assets. So all are the same term used for any company's stock or the share price. So when their prices are getting displayed, so they are getting displayed in the form of a chart. Okay, and these chart helps to understand the equation between demand and supply forces, and also they tell us the history of those particular stocks. Okay, so based on the past performance or the history, we can able to predict the future of those stocks and the type of the stock. So there are various type of charts like a line chart, bar chart, and candlestick. Okay, but in the modern modern technical analysis, we are going to use the candlestick chart pattern for our technical analysis purpose. So just as we saw that any candlestick will looks like something this either red or green. The shape and size may vary. Okay. And earlier, I mean, these are the example of the line chart. Okay, which is just based on the closing price of that particular time frame. So it is any line chart will not give the enough information. At the same time, the candlestick pattern gives the much more information about any stock. Okay. So the quick history about, so there was a Japanese rice trader who has invented or developed this candlestick candlesticks basically in somewhere in the 18th century. It is just a FYI, need not to remember or do it by heart. Candlestick are typically show the price movement in a given time frame. So given time frame, we are again going to learn about given time frame could be a maybe from 1 minute to 1 month. So depending on what time frame we are choosing, in any time frame, those candlesticks are going to show about the price movement. And what is the price movement? So basically, when we are using the candlestick, the price movement gives four different parameters, right? That is the open, high, low, and close. And what are those open, high, and low and close? So if you look at any candle, so let's say that, okay, let's use the green candle, right? So how the green candle forms basically is opens at the lower part of the candle, okay, and it maybe goes down, okay, till the lower part of the wick, and again it moves further and goes till the upper part of the wick, and again comes back and closes here at the upper part of the body of the candle. So that is how the green candle formation happens. So in any time frame, starting from 1 minute to 1 month, based on how the price of that stock is moving, this candle formation will happen. So any candlestick will provide you the four information. That is, what is the opening price, what is the highest price of the stock, what is the lowest price, and what is the closing point. So all we just, I mean, it is very simple. Um, okay, so these are the four uh, information any candlestick will provide you. That is open, high, low, and close. And these things we are going to keep on repeating and looking again and again. So we will get familiar with that. And again, the candlestick example, the how the red candle formation happens. So green candle is very simple. It starts, opens at the low and closes at the top. That is how the price movement happens up, and it is the green candle. Reverse of that is any stock is opening from here, okay, and again maybe the price is going up first and then coming down till the bottom of the wick, and again closing somewhere here. So that is how the red candle formation is happening. And again, it has the same four information: open, high, close, and low. And because the price movement from the top to bottom, from open to close, and that is how the this red candle formation is happening. Okay, so hope it is clear. I mean, if anybody has any confusion, feel free to ask. Otherwise, it's a very simple.
Sachin,
Yes.
Sachin, when you say open, the open and high would be same, right? For the lower thing,
Not
for the
really.
red
See,
candle.
when we are saying that, okay, suppose it is candle is opening at here, open, but it is again moving up
Hmm.
first.
Hmm.
Okay, so in that scenario,
Okay.
the high of the candle will be the higher than the open, and again it is coming down.
Okay.
So in that way, like, see, high in the bearish candle, the high will be always higher than the open price.
So you
Is
say
that
the candle will go up and then go down.
no the price basically? So,
Huh.
so here your question is for the bearish candle, red candle, right?
Yeah, yeah.
Okay. So red candle, look at, see where the open is marked, the body of the upper candle. I mean upper part of this red candle. So the open means when the market opens, not even non-market for any particular time frame, the price is here at the open first, and then it
Correct.
is going up, but it is,
Yes.
and again it is coming back down. So where it is started, it went up again, come back to the same level,
Okay.
right? So that is how the wick
Okay.
formation happens. And when it will start, price will start moving from the open to the lower and lower. That is how the red candle body formation will happen.
Okay. So the open and close denote the body formation, and the high and low is the wick formation.
Absolutely, yes, open and close will be the
Okay.
body formation always, and any above and below will be the wicks.
I got it.
Okay, perfect.
Will you please denote us in the examples if you have any going forward?
Yes,
Just
yes,
explain it again.
yes, definitely. I mean, these are the, we are again, as I said, we are learning the individual ingredients. We are again going to jump into the actual charts. So once we, it's important to learn the ingredient, and then we are going to do the all the things in the chart, live chart.
Sure, sir. Sure. Thank you.
Okay. So the example of the the line chart and the candlestick. So line chart, if you look at this line chart, don't have any additional information. It has a simple line. It gives the maybe price on that particular time frame. But if you look at the candlestick chart, it always has the four parameters. Each candles gives you these four parameters: open, high, low, and close. Um, Maybe I can give you the quick example about the. Okay, so I have opened the Reliance industry chart. Okay, and let's assume we are looking at maybe this candle, the highlighted one. Okay, so this is the investing.com. Maybe how to use that. Maybe we can have a separate session on that. Okay, but today just let us understand about the candle. So if I just hover my mouse on the on that particular candle, and if you look at the top here, okay, here O, H, L, and C. If I just keep my mouse on the candle, and if you look at the top here, okay, where is written O, H, L, and C, the price are changing. So you can able to see that for this on this particular time frame, the opening price is 2174 point something, then high is 2174 again, and then L, the lower is 2060 and closing is 2080. Okay. So similarly for any candle, these four parameter will be always available on top of this chart. Hope it is clear.
Yes, yes, sir. Got it.
Okay, great. Okay, what are the time frame? So in the technical analysis for any chart or any stock, there will be a highest time frame is monthly, then weekly, daily, hourly, and maybe some lower time frame also available, which is that 45 to 4 hour, 2 hour, 30 minute, 15 minute, etc., etc. And how to interpret? So any chart or any candles represent the price of that price in that particular time frame. Okay, that is a daily or weekly or hourly. So here, if you look at here, there is a options we can select the chart. So as of now, by default, selection is here. I mean daily, but if I look at the drop down, maybe I can suppose select hourly. Okay. So let me. So this is the, for example, this is the today's one. If you look at the date today, that is the 3rd of April 2023. So this is how the Reliance chart or Reliance candle moved today. Okay, this is the daily candle. If I select the hourly, that means today when the market opens at 9:50 and closes at 3:30 p.m. So in that there will be a eight candle formation. Okay, would have been happened. So each candle again provide the all four information, right? Open, close, high, and low, right? And again, I mean, depending on what kind of trading or investing we are going to do, we are going to select that particular time frame. And how to choose is, as of now, just knowing this much is enough. That okay, there are different time frames available. Okay, so the first thing we are going to learn again, the this is called the trend lines. Trend lines has the two types, that is called support and resistance. Okay, so uh, how it helps basically. Okay, so any trend line, like whenever any price movement happening, right? So depending on the historical information of that stock, the price movement sometime is getting interrupted by the previous data of that particular stock. Okay, so for example, I'm just giving you the live example here. Okay. So trend line could be the different shape. So for example, I'm just putting a trend line, which is by touching these few lowest point of this particular Reliance chart. Okay. So if you look at, I just draw the line the from the connecting all the lows of this Reliance chart. So it is touching here. Okay, I will just draw the few lines. This place, this place. So these are the 4 points where the price is coming and again going up further. So if we connect all these 4 points, it's make us a line, and this line is called a trend line. I mean, one of the example of the trend line. Okay. And because this price is taking a support from these individual 4 points, and that is how it is called a support. Okay. Or support or support trend line, right? Similarly, so that's the example here. As I shown that, okay, they see the again Nifty, Bank Nifty chart is there, also Nifty 50 chart there. So again, these are the different points where the price is touching again going up. Okay, it is not coming down, and that is the region it is called as a support trend line. Few other examples are there. This is example of the Axis Bank. So uh, we have drawn the and the trend line by touching the all the lowest point. Okay, so here 1, 2, 3, 4, 5. So there are the 5 points where the Axis Bank price is taking the support. And if you look at the end, okay, so ultimately for this point, it is again jumped. There is a price called gap down, means is that the price is taking sudden break or sudden drop and broken this particular trend line. Okay, so this example is called trend line breakdown because it's breaking the trend line in the downside, and that is why it is called a trend line breakdown. Remaining points where it took the support till the time it is the support, it is providing the support to that price. Wherever it breaks, it's called trend line breakdown. So sometime we are going to use the term whenever it comes to BD. BD is nothing but the breakdown. Again, another example of trend line breakdown is the example of the Nifty 50 once again. So here it is taking a support. Here maybe the before taking the actual support, the price jumps up. Here there is a no direct support, but it's again coming towards that. But before touching, it went up. Here the actual support happened. But if you look at the last point again, is a trend line broken. And the statement initially I made that, okay, the technical analysis is more of the art, not science. So even it is not touching, I mean, if you look at the mathematical way, ideally, mathematical via mathematics or science, this particular price lines, you know, should have touched this trend line. But again, I just said it is a more of the art, less of the science. So I mean, these points are considered as the is taking a support, but before touching, the price is moving up. But at this point of time, it has broken the trend line, and again, it is called as a trend line breakdown. So if anybody has any question regarding the trend line support and support breakdown, please feel free to ask. Okay, there is the another example where the support is becoming a resistance. So see, support and resistance is the simple thing. Support means anything which is supporting from the bottom. Okay, if you look at your palm and putting something, so we are supporting any object. Okay, that is the support. And if you move our palm up and then trying to push the finger, that means that this palm is resisting this finger to go up. Okay, so anything which is coming from the top, it is resisting the price in resisting to the price or is stopping the price to move up, that is called as a resistance. So here in this example, if you look at the price is, coming here, and this point of time, there the price, you know, it's kind of basically the chart is got reverse. Okay, so this is nothing but some resistance is happening. Okay, and the price is taking a U-turn, and price went down and again went up, and from this point of time it has broken that particular resistance, went up, and when it is again coming down, so it is acting as a support. So what is called that? Okay, when a stock breaks the support line with reasonable volume is at that time frame, there will be a lot of buying and selling happening. The support turns to the resistance. So till the time here, okay, it is a resistance, and after coming here, it become a support. I mean, vice. I mean, also, if it is a support, then it become resistance. It like in a when prices are coming down, and again it is okay taking some support and again going up. So it will the support will become resistance, and if it happens reverse, then the resistance will act as a support. In this example, the initially it is working as a resistance, and later on it turns into the support. At the same time, there is a trend line breakdown is also happening. So in the second last point, it has broken the resistance, and that is the called trend line breakdown. And again the price is coming down, and when it is again moving up, it is again acting, the same line is again acting as a resistance. So in this example, we have all the possibilities: resistance, support, trend line breakdown, and one more time resistance. Okay, some other. Okay, so this is the next one. Is this is example of the resistance. So whenever there is a any chart pattern like this, and whenever we are drawing a line from the highest point of this declining stock. Okay, so and here the whenever we are drawing the trend line, I mean, it is not necessarily that okay all the points are touching. The idea is to cover or to touch the maximum points possible. So here in this trend line, maybe 1, 2, 3, 4 points are there. So maybe out of 4, at almost 3 points are touching, and that is the a healthy trend line, we can say. So these are the 4 points where it is this line is stopping the price to go further up, and that is why this kind of trend line is called a resistance trend line. So there is another example of resistance trend line. If you look at in this example, so these are the 1, 2, 3, and 4, 5. These 5 places, this line is working as a resistance. But at the 6th time, here the breakout is happening. Whenever it is price is coming down and it is breaking the trend line, it's a breakdown. But when it is price is going up and it is breaking a resistance trend line, that is called breakout, or sometimes we call as a BO. So BD is breaking down, BO is breaking out in the upward direction. So another example where resistance is acting turning into the support. Okay, so this is the example of resistance where 1, 2 places this trend line is acting as a resistance. For the third place, where this particular resistance is sorry, BO breakout is happening, and when again the price is coming down, the same resistance is working as a support. So when the price is going up in that after the breakout, the same support acts as a resistance, right? So the both the scenario is pretty much possible into the stock market, that okay that even when the trend line breaks, the support becomes resistance and resistance becomes support. Hope it is clear. If you have any question, anybody has any question, any confusion, feel free to ask. Now we are going to look uh, the candlestick pattern. So as I said that the basic key ingredient, each and I mean any trend line, support line, or any technical analysis we are going to do, we are going to do based on these candlestick pattern only. Okay, so knowing about the candlestick pattern is one of the most important aspects of learning about the stock market trading. So there are primarily three type of candlestick patterns are there: bullish, bearish, and the neutral. Okay, so when it is called the bullish, bullish means again the bullish is derived. I mean term. Sorry, the term bullish used for the the price is going up. Bearish is when the price is going down, and neutral means neither up or down. It could be in between. I mean, there is no confirmation about the price, so that those candlestick patterns are called as neutral one. How to identify them? So first one, we are going to learn about the bullish candlestick pattern. So under bullish candlestick patterns, there are these five types. Okay. The bullish candle, straightforward, the hammer, bullish piercing, bullish engulf, and the morning star. How they look like. Okay. So, okay, first we are going to look at the hammer. So any candlestick pattern which has this kind of formation. Okay. The hammer has the upper part, which is kind of a thick iron and has a handle. So similarly, the hammer candlestick pattern has a small body of the of this candle, and the lower side it will be a longer wick. So typically the wick or the shadow. Okay, so wick is also called a shadow here. So wick or the shadow is will be 2 to 3 times more than the body, and this body should be on the top, and the handle should be below. So it's kind of a hammer in this shape, like the hammer you normally hold, keeping the iron part upside. If this kind of candlestick formation, if you will see, this is called the hammer. And in this example, the color of the body doesn't matter. It could be red or green. It doesn't matter. In both the scenario, it will be considered as a bullish candlestick pattern. Okay. And the one important point here to note down is they are considered as the potential bullish reversal sign when found at the bottom of a downtrend. So any any chart pattern which is coming down, and at the bottom of this chart pattern, if you find this kind of the candlestick, that means it could be considered as the bullish reversal. Maybe from there the chart or the price is going to go up. Okay, so this is the example of a hammer. So if you look at this example of again Nifty 50, so from here to here, this is the daily chart pattern example. So from left to the middle, it is almost the price is going down, and there is one place. Here is also one hammer. The price is started going up, but again it's reversed from here. But from the second time, again the kind of a hammer formation, and from there, the price is started going up. Okay, so for hammer, important if it is found at the bottom or at the end of the downtrend, it will be considered as the potential reversal from that point of time. The second type of bullish candle is called bullish piercing. The bullish piercing is basically a candlestick pattern where two candles are involved. Okay. The first candle should be a bearish candle. That means a red candle. The second candle need to be a green candle. Okay. The ideal situation, is that when the second candle opens with a gap down, at the same time, it is not necessary. It can open at the same level also. But the green candle should, the body of the green candle should close the medium. Median means above the half. So if the red candle, if you make at the half, it should closes Okay, the body of the candle, green candle should close above the median one. Okay, so this example, the first one, okay, this is the ideal example. Okay, the first one is the red candle. Second one is again the starting from here, that is a gap down. Okay, so that means the first in this time frame, the price is closes here. But when second candle start, it start from even down and again closing above the half of the first candle. And the second example, it is again opening at the almost the same level, but again closing point is above the median of the red candle. So this two candle formation is called bullish piercing, and it is considered as the bullish candle. Bullish candle means when we can predict such with such candle formation that okay, price is going to go up from this candle combination pattern and onwards. So this is the example of L&T Limited, where if you see at the kind of a bottom of the chart, there are the two candlestick pattern. The first one is the red candle, the bearish candle, and the second one is the green candle. And from these two candlestick formation, the perfect bullish piercing, and from here the price is started going up and up. And this is again the daily time frame example. Okay, so these are the okay. Another example is
Sachin,
called
can you go back to the description slide?
oh, okay, this one.
Yes, yes.
Yeah.
One second.
Yes, yes. Take your time. Is there any question you're asking, or I mean, don't worry. If you need, I will send this PPT.
I was just
To,
observing the candle.
yeah,
Fine.
no
You
worry.
can go. You can move on.
Yeah, I can share these PPT with all of you if needed. Okay. Yeah. So bullish is engulf. Bullish engulf is again the two candlestick pattern where the first candle is a normal bearish candle and the second candle will be the green one. That is a bullish candle. Okay. So in a perfect situation of the bullish engulfs, the second candles open with a gap down. However, it can also open at the from the same level or even little bit higher than the first can where the first candle closed. Okay. The main important here is the closing of the bullish candle should be a little higher or at the same level of the previous one. So engulf means it completely neutralize the effect of the previous candle. Okay. So this is the red candle. This is a green candle, right? So after the red candle, green candle happens. So it completely neutralizes the effect of the previous candle. Okay. In the all the three examples. Okay. Because so it is again opening even from the little bit up, but the closing of the second candle is above the first one. And the last example, it is anyway closing much higher than the previous one. Okay, so any combination of these example will be considered as a bullish engulf. But the bullish engulf is the one of the easiest bullish candlestick pattern to observe. Okay, it's a very simple to remember that okay, if the red is after the red candle, any green candle is completely neutralizing the effect of the previous candle. Okay, so this is example of under Nifty 50. Okay, so if you look at these two candlestick pattern, the first one is the bearish candle and the second candle is much bigger than the previous one. So that means it is again the engulfing completely the previous candle. And from here, the price is simply reversed and going higher and higher. Right. Yeah. Next combination is called morning star. So morning star is basically the three candlestick pattern where first candle is the normal bear. In the all two example, the first candle is the normal bearish candle. So what is the difference is the second candle is typically a neutral candle or the small candle with a little smaller body and a smaller wicks. Okay, and typically sometimes it starts from the gap down with a low of the previous candle, right? And the third candle is the bullish candle, which opens a little gap up as compared to the middle candle. Okay, and again closes above the median of the first one. Okay, so
Sachin,
yeah,
so in this example, does it mean that there was an initial high and then the second candle it opens on a low?
yes. So second candle here is a small candle formation is happening, and it can open from the low or maybe a little bit similar one, but the ideal condition is opening from the low, again going up till this point, and the third candle is the complete bearish where it is again
So, what is the
opening.
difference between the first diagram and the second diagram for the second candle?
See, okay, that's what where I was coming from. It doesn't matter what is the color of the second candle. In the both example, if you look at the color of the second candle is a primary differentiator. Okay, otherwise both the examples are almost the same. So in the
So, does
morning
the
is
does the color in the two examples have different reading?
no, is the same. These are two examples of the same morning star. Okay,
Can
so,
can
so
can I say something?
yes, ma'am, please go ahead.
See, at least my based on whatever I heard from you so far, my understanding is that in the first diagram, the green means that it is opening at lower bit and closing at the higher, the middle one. And in the
Right.
second one, it is opening at higher and closing at lower. And
Yes.
that is why the green one in the second one is almost parallel to the closing, right? So it is at the lower of the middle. It is aligned to lower of the middle because closing is lower. While in the first one, the closing is higher. So it is aligned to the higher point of view.
Right. In the
So it is
first
aligned
one,
to the closing.
correct. In the first one, it is closing will be here, and the second one, the closing will be somewhere here down. So,
Yeah.
so
And Sachin, I just have one request for
yes,
beginners like us. If you write opening and closing, that O and C is there on the this thing, it will be very quick for beginners because we
okay,
right now I have to imagine a lot. Then it will be there that opening, closing. So it will be faster for us to understand.
yes, sure.
Just a view. You can choose to ignore it.
Yes, yes, sure. I will try to include that part. So that was the reason we spend a little extra time on the individual candle, but maybe that point noted, I will try to include that open close. So yeah, so thanks for observation here. So basically, the second candle, I mean, there is the color of the second candle does not matter. Okay, so main point, no matter which is the candle is green or red. Okay, they are because they are the neutral candles. So actually, they are not adding. They are not adding any major value in the formation of the overall combination. Okay, the result basically. The main result is happening that with the third candle. Okay, so in the third candle is again starting from the almost the similar level or little bit higher from the second candle, and the most important is to close just above the median of the first candle. Okay, so if we combine even these two candle, it will be something like a previous candle. Basically, this will be example of similar this candle only, where in the second example it is neutralizing this part, but in real life scenario there, I mean, there may be a possibility of, okay, we can see the combination of these three candle, and then not to confuse, we are learning this morning star candle also, so that we should know that, okay, this kind of formation is also considered the bullish candle. I mean, once you start looking at that, it will be, I mean, once you practice little bit more, you should be able to get it. I mean, after maybe the end of next two session, we are going to get some examples and where you can go and that practice into the chart and try to find out those candles. So it then will be a more clear to you. Okay. So example of morning star, again the Nifty 50 example. If you look at this candle, right? So this is again the second candle is again looks like a inverted hammer. I mean, this is the another is candle type that we are going to learn. But if you look at these three combination of these candle, the first one is the clear bearish candle. Second one is the more of the neutral candle or inverted hammer, and the third one is the completely clean bullish candle where it is starting from here but closing much, I mean, above the half of the first candle. That is the bearish candle, and this is a very classic example of morning star. And again, if you look at from here, the price started going up. From starting to this place, it is more of the sideways pattern, and after this place, it has given a clear sign of bullish candle, and the price is going up. Okay. So now these were the example of the bullish candle. Now we have the bearish candle. So I think we have already utilized the 1 hour time. I'm not sure. Maybe you can able to spend maybe 10-15 minutes more so that we can complete, or maybe I'm okay. So based on your response, I can extend the 15 more minutes, or maybe if you are tired or it is enough for the day, we can wind up the session this point of time. Please share your responses maybe in the chat box so that I can.
We can
Okay.
wind up. I think because we have enough to absorb today. There's so much we've learned.
Yes, I
Sachin,
can
will you
understand.
be giving us any assignments or something which we can do and
Yes,
re-emphasize whatever we have learned?
yes, I'm planning to. So, but once we start is complete this various candlestick pattern, maybe hopefully we can able to complete by tomorrow. Then I will try to share some of the assignment that you can do the practice at home.
Okay. And is there any reading that we have to do? Like, I remember in one of the sessions you had mentioned Intelligent Investor as one of the books. You just made a very fleeting uh,
So
fleeting
yeah,
mention of that. So just was wondering.
yeah. So those books are not really related to any any technical analysis or so. It is a generic. Basically, it is kind of a helping us to I can say make up our mind in a better way. It's like before seeding a plant, we are kind of a making up or uh, creating a manure, or so those kind of books are helping us uh, to have the right mindset when before entering the stock market. So it's a more of a self-help book in general, not anything specific to the stock market or the technical analysis. I mean,
Okay,
they
so
are
for technical analysis, is there any book you recommend? Because we will have to refer to something
not
offline.
really, not needed. See, it is more of the experiential and the practical. So maybe once we learn the basic one, then there may be a n number of things like once we have the n number of ingredients in the kitchen, then we can cook by ourselves. Sometimes we can create our own recipe also. So what I'm trying to share here is the main ingredient and some of the recipes which is working for me. Remaining one, as an individual, once you know the ingredients, you can create your own recipe also.
Okay. So this bearish candle, inverted hammer, these are all the standard terms. Are these something that you
Yes, yes,
utilize?
yes. These are the standard one. I mean, this open. If you can open these term into the Google also, you may able to find it out. So there
Okay.
will be a many other candle type also, but these are the I can say the most important or the frequently used one. There may be few more one which we will be learning into the level two, but as of now, these are the basic ingredients. It's like Ajinomoto. Ajinomoto is not used in all the cooking, right? So few ingredients will be like that also. That when as and when needed, we will use that. And sorry, I mean I may
Okay.
be using lot of examples later the cooking because I love cooking. So I'm just giving the correlation. Okay, another example I can
Okay.
say that when before driving we need to understand the each and every equipment in the car. So whatever we are learning here is the individual mechanism or the functionality of the car. And once we learn individual, and then we can learn how to drive the car.
Okay. Anyway, Sachin, you are very good at analogy, and
Thank you,
it
ma'am.
definitely helps us to understand it little faster. Your analogies are very interesting. So
Thank you so much, ma'am.
keep those
Yeah.
up.
Yes, yes.
You
I mean,
try
that is
your
what.
best to make it simple for us.
Yes, correct. I mean, correct. I mean, based on my learning, I'm trying to make as simple as possible. However, more simpler depending on your questions or audience responses. I'll try to make it even much more simpler or easier, or I can say interesting also.
Okay. I'm just hoping that when you give us exercises, you will give us something and you'll ask us to predict what will be the next step, and then next day you show us, okay, did we predict it right?
Yes, yes, for
Because
sure.
ultimately it's about prediction, really.
Yes,
You
yes,
get the data, you predict.
yes, correct. So once we learn the basic ingredient, then maybe we'll try to look into the real market scenario and try to understand. Okay, when I mean, what are the scenario where it is getting applicable?
And may I try to understand how many days are you going to take classes like this so that I can plan my schedule?
So see, basically, overall, this is the whatever we are learning. It is a, I can say, we are in uh, LKG.
Okay.
So even suppose we need to complete the primary one. So within the, this is the first module is called the primary. Within the primary, we are in LKG, or maybe that, yeah, LKG, I can say. So overall, we have the four modules, and in one module, after completing the one module, we can, I mean, individual can start taking the trades. It's
Okay.
like
And
a,
like,
yeah, yeah.
each module is how many days approximately? How many sessions?
So each module will have around 8 to 10.
Okay.
Later module, there's the advanced one, which includes the overall Elliott wave theory, and that is the one of the, this is the fourth module, which is the highest one. So that will take maybe some extra time, but the basic foundation is the first one. I mean, whatever we are going to do, it will the learning of the first one. Either it will be a second module related to the future and options, or one more module related to the price actions. So everything, the foundation will be the this the first module. So first module will give the quick start about, I mean, individual can start taking the trade, and over the time they will learn the additional one. It will give them more and more opportunities. So it's like a
Okay.
learning the basic driving. Any maybe a four-wheeler we can drive, but to drive the advanced cars, maybe the Mercedes or the Ferrari, or racing cars, we need a much more, I can say, equipments, safety gears to drive. So those safety gears and equipments we are going to learn in the subsequent modules.
Okay. And um, okay, fine. So about 10 sessions is the basic, is what we are talking about.
For the for the
And
first
we're
for the
done with
first
the
module.
yeah.
Yes,
First
yes,
module, we're done with 3 and we have 7 more to go. You're going to take sessions from Monday to Friday,
yes,
and
Katha.
then
Yeah, for
Saturday,
the,
Sunday is
yeah, after first module, maybe we'll be taking a some break. We okay to people can, maybe by the time I expect people have their own trading account, they will start doing that one. Maybe start discussing some more questions. So when it will be a kind of a, you know digested, then we can start with the second module. So second module will basically give them more opportunities to take the trade. But first one, the practice of the first module will be important, because there are a lot of learning curves involved, like learning about how to investing, how to use investing.com, how to use the trading account. So those are the additional one. After that, it will be a more focus on the learning part. I mean, learning about the technical
investing.com is just a website, or it also has an app?
uh, app is also there, but um, I mean, once one somebody is expert only when we can able to see only the chart. But for any analysis purpose, we need to have a proper desktop application only. I mean, app one, only the chart will be visible, and any analysis is practically not possible. So for example, that
Okay.
support line, trend line that we are drawing here, and after that will be a lot of other indicators that we are going to learn. Those things practically we are not not possible to learn and then see. So we are going to learn a couple of indicators which will be added on top of these chart patterns to analyze, to have a more better prediction, or I can say better conviction about our prediction. So that will be, that again we will be learning in the first module itself. So some of the indicator we learn during the first module and the subsequent sessions, and remaining will be there in the level 2.
May I ask you, for how long have you been doing the investment?
I started sometime in the COVID period. So it has been a four
Around
year,
2-3 years.
2-3 years.
2020 is COVID started.
Correct. So this is my just a portfolio. Quick one is going. So USD INR 18,000 profit market has been closed at 5 o'clock. I hope tomorrow I should be able to exit. So I am running on 18,000 profit. Hopefully by tomorrow I will exit my this trade. Silver I have taken. So yeah, so mostly because working professional. So I'm doing the part time. The good thing about
How
the
much
silver
time
is
are you able to give every day for this?
not much time every day, because I'm mostly doing the positional basically. So maybe I can enter today, I can exit maybe after 2 weeks or so. And more personally, I prefer silver because that one I can do after my office hours. Maybe because the silver market in India is up to 11:30 in the night.
Okay.
Yeah. But investment purpose, I mean, we can maybe couple of hours in a week, we can, we can do and then do the investment and all. So depending on the people, I mean, who maybe somebody is a housewife and they have the bit time or doing some other business, so they can also do the daily trading also. So my for doing anything, the basic technical analysis will be the same. Depending on, it depends on how they are going to apply and which markets. So I mean, technical analysis is not, it will be remain same for any market, Indian market or international market, because chart
Or
will be
if
the
it's
same.
commodities, also same, shares
So,
also.
correct. Correct. So whatever I have just shared with you, it is a commodity zone.
Okay. And
Because
you mentioned silver, so it was commodity.
silver is a commodity. USD INR is again the maybe currency. It closes 5 o'clock. But commodity is I mean, any working professional, they want to do the something maybe a daily basis or weekly basis. So commodity is a good one, because the market runs till 11:30 in the night, from 9 o'clock to till 11:30. Okay, so yeah, I hope we are. Is there any question related to the today's session, whatever we have discussed about the candlestick pattern or the support resistance? I mean, any last one or two question, I will be happy to help, or maybe we can end of the session.
This is a very good session. Thank you for it. And I'm really looking forward to good assignments, because we need to practice, otherwise we'll forget.
Yeah, sure, ma'am. By maybe after seconds, I mean, tomorrow session, day after tomorrow session, I will share some of the assignment. Okay. So I hope
Okay, good night.
yeah. Thanks, ma'am. Any other question by anyone? If you have, please feel free to ask. Otherwise, we'll end up session here. Okay, I assume we are good for now. Thank you so much, all. And we'll continue tomorrow.